Hi everyone, Brian from Variable Traders here. This is the weekend video, May 1st. And of course it was a crazy end to the week. I warned everyone it was going to be volatile, most likely. And we got a rip your face off rally on Thursday and an equally rip your face off decline on the Friday, going out near the lows of the day. So more volatility to come. Let's take a look at what we got for the coming week. Okay, so we can start out by taking a quick review of last week's action. Of course, as I already mentioned, Thursday, Friday, super volatile days, trading days up and down. And we've got the Fed going into a quiet period now. I got that meeting coming up next week, but on the week overall, definitely lots of bear market action here. You can see all the indexes down 2.5%, 4% on the IWM, really the one taking the hardest hit. Areas of strength and weakness, I can't really say there was much strength. Energy and technology staples red, but they were down the least on the week. Real estate and consumer discretionary, of course, really taking the biggest hit, the weakest sectors. Treasury note really didn't change very much over as the week settled out here. We started the week out about that level and still stayed there. So kind of some temporary pause in the action there on the yields. US dollar strength continued, but it looked really extended as we got into the latter part of the week, and probably some topping price action here. We've really gone ballistic here, parabolic, and so we're looking for maybe a bit of a pullback on the dollar. Before we go any further, I always like to put in a quick ad for my book on Amazon, How to Swing Trade, Rules, Routines, Strategies of a Swing Trader. It's there on Amazon if you want to check it out. So let's take a look at some charts here. And we'll start out with a 2-year and 10 years. I always do. You can see here on a weekly basis, really didn't change much, down 0.75 of a percentage point, but still hanging around that 2.7%. Nothing, just taking a bit of a pause. Same with the 10-year. Again, not really changing that much, coming down a little bit. But again, we just sort of having a bit of a consolidation after we had this big run up here. On the transports, again, really volatile week here. Up Monday, down hard Tuesday, up Wednesday, big rally Thursday, and sold off Friday. So you can see here just a really volatile week of buying and selling. Investors and traders shifting their viewpoint on a daily basis. You can see here on the week we did finish down 1.33% on the transports. Nothing to really say about volume. It's and momentum just kind of hanging around in this range. Then we get into the indexes here. You can see big down day. We lost this area here at 33,000. I kind of felt would hold just below it. You can see the volume pretty building and getting higher than normal. That's not just retail. That's some of the funds. That's the institutions. And you can see here on a week here we are really in this area, just testing this level that held here and also held here in this pullback at end of January or into February there. So we're sort of at a critical level here. You can see volume again on the week building. The Qs, sort of same story. Volume's been building in this volatile period. You can see here big volume last week. Again, decisively lost this level, not like the Dow, which seems to be just sort of teetering on the edge. And we are definitely heading down. All the momentum indicators looking lower. Of course, the Qs are one of the ones that are getting hit the hardest with rising interest rates. SPY, again, just right, going to be testing this maybe this 410 low. What is this? 409.37 from back in the end of February. We're back down, right down at that level. I'd be watching for that to hold. See if we get a rally off it. It's not very far away. The IWM again really was sort of trading in this bit of a range here, and really started to sell on. Even though it popped up on Thursday, didn't go out near the high of the day, and then of course the selling just kicked in on Friday, and they really took the market down on this on a weekly basis. Here you can see again volume starting to build, and we definitely lost some key levels here. So maybe heading down to this sort of 172 area, which is where the 200-day moving average is. And volatility again, down Monday, up Tuesday, all over the place here. But again, if we see a spike, I'd be looking for a spike up to around 36. If we can get up there, I would say that's probably a good indication that maybe we're getting a temporary bottom. So I'd be watching the VIX to see if we end up spiking sort of 36, 37 area and then pulling back from that. Again, the dollar, mentioned this in the review, we did have a parabolic move off of this, out of this 27 range on the UUP, which is a dollar index, just blasted higher. And of course, things don't go straight up forever. You usually get a pullback, at least pullback period of consolidation. So I've been looking for at least a period of consolidation here. The dollar's just been on fire. And Bitcoin just is still firmly in a downtrend here, and we are testing some pretty important levels. This 37,000, 38,000 area is pretty key support at this point. Take a look at it on a weekly basis. Again, we are sort of trading in this range. We did make a higher low here, but now we've pulled back to this low, so really it needs to sort of hold this level. Otherwise, we may be in for another downtrend here on the Bitcoin and probably some of the other alt currencies. Let's take a quick look at some of the sectors here and just see if anything's standing out. You can see here consumer discretionary really just really down at an area where there should be some support, but really sold off, not surprisingly, with inflation and everybody's wallet getting eaten into just by rising food and energy costs. Communications again getting hit pretty hard. So technology, same thing, just higher interest rates eating away at those growth stocks. Industrials not looking very good. Materials kind of hanging in there. They should be doing better, but because of the material prices are up. But you can see here they've had a big sell-off. The problem with these really big sell-offs is pretty much everything goes down. Doesn't matter if you're if you're the good house in the neighborhood. If the neighborhood prices are going down, all your price is going to go down too. You can see here energy is still up pretty high, and yet it's suffered a pretty significant pullback from this high that we saw. Even the staples, gets back to my point as well here. Everything gets sold when a market is going down in a bear market. Pretty much the same way everything is bought when the market's going higher. The trash goes up with the quality. So you can see here, utilities, same thing. This should be a safety trade. This should be a safety trade, staples and utilities, but all getting sold off. Financials are trading absolutely horribly. In a rising interest rate environment, you would think they'd be doing okay, but I guess concerns maybe about some maybe loans that are going to go bad or something. But again, financials really taking a bit of a hit here. So I'm going to keep my watch list pretty simple this week. Again, everything's going down. When you get a market that everything goes down, there's no point in trying to find gems in the dirt. Everything gets sold if there's margin calls. So I'm still looking at some of these as possible re-entries. CCJ maybe around 25. Again, I think uranium has a good future, particularly with the shift in energy, things that are going to be going on with embargo on oil out of Russia, and there's going to have get energy from somewhere. And I think uranium obviously is a cleaner energy source. So I think again, I think in the long term, uranium looks pretty decent. It's more of a fundamental story. FCX, I am looking at this again. I think copper still has a story too here. And maybe this 200-day moving average, which is where it bounced before, could be a good potential for a re-entry. Silver just looking horrible. SQQ. Okay, so this is where I'm really just keeping my money right now. If I am investing in anything, this is just a way to short the Qs. It's an ultra pro short. They're good for day trading. You can swing them, trade them as well. But if you do maintain a sort of a short thesis on the market, this is a good way to play the short side, and it's just better to play the index because if everything's going down, this is the best way to do it. You can see here, took a bit of a hit Thursday and then just came ripping back on Friday and trending higher. Tesla, I'm kind of keeping an eye on Tesla because I just think that there's a lot of weight on this stock right now with Elon, taking Twitter and selling his shares. I don't know where he's going to come up with the rest of the money for this, but knowing Elon, he'll maybe figure something out there. But right now, I think Tesla remains under pressure. Just people thinking maybe he may have to sell some more shares, as he already has. The USO, the oil, I'm keeping an eye on that. It just seems to be sort of trading in a very narrow range here. And the other way you can play, I didn't put this on here, but TZA, again, this is a short the IWM, short the small caps. Again, it's be careful with this. It's beta, so it's 3 times. It moves 3 times what the average does. And again, it had a really nice run on Friday as we popped up there, and I played that pretty much all day after we started to get into a trending day. Let me just show you quickly what a trending day sort of looks like here. It's a 15-minute chart. Get an update on this. Yeah, so you can see here we tried to break. This is sort of an inverse. So the market tried to break up in the morning, failed, came back down, broke down here, and then came back up. Tried to retest the level that we went out, and then it just started to break. And as soon as it started to break this lower level here, that was the signal that it was going to go lower. Probably easier to look at it as a TNA trade. Let's see the 15-minute on this one. So you can see here we had a really strong day Thursday, kind of went out a little bit off the high. See, we kicked up, tried to break out, false breakout, and from there it was all downhill as soon as we couldn't get back, recapture this previous day high. And we always talk about this in the room as previous day high being a critical area of support or resistance. When a stock moves into that area, you can see there was a failure, and right from that on, it just sell all the way into the close and very close to low of day. So that's it. So wrapping things up with a quick summary here. May 7th or May 2nd, let's look ahead here. I expect more volatility. Probably some rally days and some more selling off days, certainly leading into this Fed meeting, which will be Wednesday, finishing up Wednesday afternoon. Everybody is expecting this 0.5 rate hike. Fed Powell said as much. Balance sheet reduction seems to be on the table as well, and it's already happening. But you can see here when I look at all the levels here, just to summarize, we did lose this support 33,000 on the Dow, and next level could look for would be sort of 32,600 area. We did lose 320 on the Qs. Next level could be 300. We did lose 420 on the SPY, and of course next level's down here around 390. And IWM, the 190 support was lost. So every level pretty much was violated on all of the indexes I already mentioned. So earnings coming up this week, we've got about 50% or more reported in the SPY last week, but we've got more coming. We've got 6 before the market open, Moss and Devon after, Mosaic I should say, and Devon after the market close, Pfizer, BP. Starbucks is interesting because it's obviously a consumer discretionary. AMD, of course, that'll be interesting. Skyworks, Airbnb, travel sector's been not bad. Wednesday, CVS, Moderna, Barrick, and then in the after hour on Wednesday, Twilio, Uber, Etsy, and Marathon Oil. So lots more earnings coming, lots more reason for volatility. So keep the powder dry and look for a bottom here. And again, we'll be starting the pre-market show at 8 o'clock in the morning, Monday morning, live on YouTube. Join us there. And then, of course, if you're a member, we'll be trading the market open at 9:30. Hopefully have a great rest of the weekend, and hopefully we'll see you Monday morning. Take care, everybody. Bye for now.